Everyone, for another deep dive. Today we're looking at something that I think is really interesting.
Okay.
We're going to be looking at agricultural investments
Right?
as a way to create passive income.
Sounds interesting.
And we have some excerpts here that we're going to be pulling from,
Okay.
all about land leasing and crop sharing. So this should be, I think, a pretty interesting discussion today.
Yeah, I think there's a lot of hidden potential
Yeah.
in agriculture that people don't even realize.
Yeah, I think so too. And
Yeah.
I think people, when they think about like passive income, and especially if you think about augmenting a pension or something,
Yeah.
they don't necessarily think about agriculture.
No. Good.
You know, it's not the first thing that comes to mind, but
Yeah.
it could be really interesting.
Yeah, definitely.
So our excerpt actually mentions this idea of investments in agriculture.
Right.
And I'm curious, when you hear that, what comes to mind for you?
Well, I think the first thing that most people think of is, buying a farm.
Yeah.
Or buying land. But that's obviously a very capital intensive option and comes with a lot of responsibilities.
Yeah, if you don't know what you're doing.
Exactly.
Not something you just jump into, right?
No, absolutely not. But there are other ways to invest it in agriculture without actually getting your hands dirty.
So what would those be?
So you could think of it as a spectrum,
Okay.
You have direct land ownership on one end.
Okay.
And then on the other end, you could have something like shares in agricultural businesses.
So like publicly traded companies.
Yes, companies that specialize in farming equipment, food production. So you're essentially betting on the success of those businesses.
So rather than being like a farmer, you're just kind of investing in the industry.
Exactly.
As a whole.
Yeah.
Interesting. And so would that be considered passive income, or is that more of just a traditional investment?
I mean, it can be considered a form of passive income.
Okay.
Because you're not actively managing the company.
Sure.
You're an investor.
Just relying on the stock to go up.
Exactly. Hoping for dividends and growth.
And so then what about people who maybe want to be a little bit more involved with the land,
Right.
but they don't want to buy a whole farm or whatever?
Right. So that's where agricultural investment funds come in.
Okay.
These are essentially like mutual funds, but for farmland. So they pool money from multiple investors to buy and manage farmland.
Interesting.
And they offer diversification professional management. And they can focus on specific types of crops or regions.
Oh, wow.
Or they might specialize in sustainable or organic farming practices.
That's cool. Like, so you could basically pick what flavor of agriculture you want to invest in.
Yeah. Align your portfolio with your values.
Wow, that's fascinating. Okay.
And your risk tolerance.
So then let's talk about the two that our excerpts focus on.
Sure.
Which are land leasing and crop sharing.
Right.
So land leasing, I feel like we've all kind of heard of this.
Yeah.
But can you just break down like how that works?
Yeah. So basically, if you own farmland, you can lease it to a farmer.
Right.
And they'll pay you for the right to use that land.
Oh, so they don't own the land.
No.
They just rent it from you.
They just rent it, and they either pay you a fixed annual rent, or they pay you a percentage of the profits from the crops they grow.
So there are two options there.
Okay, yeah.
And then how do you even find a farmer to lease your land to?
Well, there are a few different ways.
Okay.
You can network with farmers in your area.
Okay.
You can go through agricultural real estate agents who specialize in connecting landowners with potential lessees.
Interesting.
And there are also online platforms.
That makes sense.
Dedicated to farm leases.
So fixed rent sounds good in the sense that you know how much money you're going to be making.
Yeah, it provides stability. But you're right, it means you might miss out.
Yeah.
If it's a really good year.
Like if they have a bumper crop.
Exactly.
You're not going to see any of that extra money.
Right. Whereas with a crop sharing agreement, you kind of ride the wave of the harvest. So you could potentially earn more in a good year, but also less in a bad year.
Yeah, it's a gamble.
It is a gamble.
So when you're deciding between those two then, what are some of the things that you should think about?
Well, I think the biggest thing is your risk tolerance.
Okay.
And your financial goals. If you need a really stable income, fixed rent might be the way to go.
Makes sense.
But if you're willing to accept more risk,
yeah,
crop sharing might be more appealing.
Okay.
You know, if you think you can handle those fluctuations.
And crop prices can fluctuate a lot, right?
Oh, yeah, absolutely. I mean, corn prices, for example, have swung as much as 30% in a single year.
Wow.
So, that could really impact your returns.
And so you're kind of becoming a silent partner.
Exactly.
In the farm, in that case.
You are.
So then what about this idea of crop sharing?
Right.
Is that the same thing as land leasing, or is there a difference?
So it is a type of land lease agreement.
But instead of paying fixed rent, the farmer gives the landowner a percentage of the harvested crops. So your income is directly tied to the success of the harvest and also to the market price of the crop.
I see.
At the time of sale.
So you're even more involved.
You are.
In the farm at that point.
Because you're really relying on those crops doing well.
And being sold for a good price.
Exactly.
So are there any other things to consider?
Yeah. I mean, there are things like soil quality water rights, government subsidies, all those things can impact the yield and the profitability of the farm.
I see.
Which would directly influence your share. And then you're also sharing responsibility for decisions.
Oh, wow.
Like what crops to plant.
So it's almost like you're business partners.
It can be.
Yeah.
In a way.
So clear communication is really important.
Yeah, and a good contract.
Exactly.
So it sounds like both of these options could be really interesting ways.
Yeah.
To diversify your income stream.
Absolutely. And potentially benefit from the growth of the agricultural sector.
So whether you're looking to, boost your pension or just have some extra income coming in.
Right.
Agriculture could be a good option.
It could be, yeah.
So let's say you have the opportunity to invest in farmland.
Okay.
Would you go with a fixed rent lease or the crop sharing? What would you pick?
That's a tough one. I think it really depends on your individual circumstances.
Yeah.
How much risk you're comfortable with, how much involvement you want to have in the farm, your financial goals, all of that.
Yeah, it's a lot to think about.
It is.
But it's a really interesting topic.
It is.
Thanks so much for being here.
Thanks for having me.
It was great having you. And thanks to all our listeners for tuning in. Be sure to join us again for another deep dive into the world of alternative investments. See you next time.